The Fed is about to embark on its quiet period ahead of its next policy meeting in early May. And despite calls for the central bank to cut interest rates, markets still see a cut as unlikely. Joining us right now is former Atlanta Fed President Dennis Lockhart. He's also a distinguished professor of international affairs at Georgia Tech. And Dennis, let's talk this through a little bit. First of all, where do you think the economy stands right now? Where do you think inflation stands? And how is that going to impact what the Fed does or the FOMC does in a couple of weeks?
Well, of course, the data are always backward looking, and the data we've seen recently don't yet suggest to me that the economy is in free fall in any way, but there's certainly a buildup of anecdotal information and a buildup of snippets of data here and there that are worrisome. And I tell you, Becky, I'm increasingly concerned that the Fed is going to face a stagflationary situation later in the year, maybe temporary, but nonetheless put them in a stagflation decision dilemma.
What makes you think that? Is it things that you're hearing, things you're guessing? Why do you see stagflation?
Certainly, there's a lot of guesswork at the moment, but just listening to your program in the 7 o'clock hour, for example, listening to talk from the auto dealer that you had on, it seems that everyone is anticipating tariffs or forcing them to raise prices in one way or another, and that suggests, at least for a period of time, that we're going to see the price indexes jump higher. And at the same time, again, one of your guests talking about the weakness of, actually is one of your staff people talking about the weakness of high-income consumers and their outlook for the future. So a lot seems to be building up that suggests both a slowdown and an inflationary problem, at least for the short term.
So when the president and others look at this and say, look, it should be obvious that the Fed should cut rates if we are worried about the potential slowing that's coming and maybe some issues that other businesses are having around the ends, you're saying the Fed is going to be looking very closely at inflationary pressures, and not from the traditional PCE, but maybe from what they're hearing in each of their districts, from business owners, from consumers?
You know, in times like this, I think the committee and Chairman Powell will focus very, very intently on the dual mandate objectives. Those objectives, as you know, you've heard it over and over again, are low inflation and maximum employment. Growth itself is not a mandated objective. So if you had a situation develop, for example, in which you saw a slowdown, therefore growth going down, but employers are holding on to their employees, trying to look through the situation, you don't see a hit to the employment mandated objective the way you might expect, and at the same time prices rising, that to me would suggest that the committee would prioritize inflation. And it could be the reverse, that you look through the higher prices and consider them short term, and therefore but you do see something in employment. I don't think we know, quite frankly, how this is going to break. It's too fluid and too complex a situation.
And in a situation where things could go either way, you think that the FOMC would just pause, just wait and see?
Well, I think certainly for now, there's simply not enough clarity in which to make a change of policy stance. And I don't think the committee's in the business of clairvoyance or of guessing. They're going to wait for some buildup of evidence that the economy is trending one way or another. That, of course, always has the potential of almost automatically putting them a little behind the curve if the economy is evolving to a different place very rapidly. But nonetheless, they operate on data, so they're going to have to wait for not just a month's data, but for pretty clear evidence of how things are trending.
So that puts them in direct conflict with what the president has stated again and again he would like to see happen, that he would like lower rates. I think the Treasury Secretary would like to see lower rates as well for consumers who are dealing with high costs for loans when it comes to houses and cars. How much does that pressure affect the thinking in the room? How does that play out?
Yeah, and my experience, Becky, when you're in the room, there's simply no consideration or discussion of what you might call politics or the political situation. I was there for 10 years. I can count on one hand the number of times anyone even brought up a political consideration. And if anyone really began to dwell on that, that person would likely be quieted in some way, because it's just not a political process. So I think, and Powell has emphasized this over and over, the committee's going to just follow what it has been instructed by Congress to do, and then focus on those two key economic criteria. But they could be in conflict, at least for a period of time, and that raises a question of which direction they're likely to go. I don't see rate hikes as very, very plausible in the near term, but no. I can certainly imagine a situation of holding for a period of time.
Okay, but if we see inflation or stagflation as you fear, which mandate do you think the Fed holds above the other mandate? Are we more worried about inflation or more worried about the unemployment rate?
Well, I'm going to dodge the question a little bit by just referring to what Jay Powell said in his press conference, which I thought was a first indication. He said that they'll have to size up the severity of the situation of the two objectives. Think in terms of how far they are from a reasonable reference point, 2% for inflation, but in case of employment, it's not necessarily a fixed number. And then also think of how long this deviation from where they want those two criteria to be, how long that is likely to last. So it's a weighing of how serious the situation is for inflation or for employment, and they can only make that judgment in the moment. They can't anticipate quite at this point how bad it's going to be on one side or the other.